How much home can a 100% disabled veteran afford in 2024? The reason we're doing this breakdown is simply because there are many states out there that provide veterans with a 100% property tax exemption on their homestead, which simply makes it a lot more affordable for veterans to be able to afford a home. Now, this is part two of our series where we're going to not only do 100% VA disability, but we're also going to include a veteran that's also receiving Social Security or SSDI. If you want to see what it looks like with just VA disability, go ahead and check out this video up here or linked in the description below. But in this video today, we're going to be doing VA disability at 100% rating along with SSDI to see what is possible for a veteran in today's market. If you want to know whether your state has 100% property tax exemption or just what your state's property tax exemptions will look like, I have linked all of those down below in the pinned comment for you guys to check out, and hopefully it helps you guys with your home search and your home journey. Okay, so as I mentioned in the beginning, we are going to be breaking down VA disability at 100% rating along with Social Security or SSDI, Social Security Disability Income, to see how much home that you could possibly afford. Now, before we do go into that, let's talk about some of the perks that go along with using the VA home loan benefit in today's market. One, it's going to be 100% financing, no money down. That is going to be the most common thing that most people know about the VA home loan benefit, but I would say it's arguably one of the most powerful things. The fact that you can purchase a house at 0% down payment or 100% financing is super powerful. Because this is even possible is really coming from the VA. You see, the VA is guaranteeing 25% of your loan in the event that you potentially foreclose, default, or have a short sale. This is actually what makes VA loans less riskier for lenders to be willing to loan on, because they know that they have the VA backing in regards to having your back as a veteran using your VA home loan benefit. The next one you probably already noticed here is going to be the no credit score requirement. This one is a huge one, but I don't want you to write that down or go memorizing it, because here's the little problem. The VA does not actually do loans. They only guarantee the loan. It is lenders that do loans, which means that those lenders are going to have their own rules and overlays and requirements that can be on top of the VA's requirements, which means that those lenders may have their own credit score requirement in order for you to get a loan from them. Now, what I want you to remember, though, is whatever credit score that they're telling you may not be the credit score that is going to apply to all lenders. That just may be the credit score requirement with the lender that you're working with. A lot of the really well-known lenders out there that veterans love going to, in which I won't say their names, but I think you know who I'm referring to, they have a credit score requirement of 620 or above. A couple of them actually even require 640 or above. Me and my team can work with veterans as low as 580. And we've even helped veterans that are below that credit score spectrum as low as 540 that I personally have experienced helping. And that was through going the manual underwrite, the manual underwrite direction. Now, I'm not going to go into what a manual underwrite is, but if you want to check that out, I have an entire video that I did on that, and I will link that above and in the description for you guys to go ahead and check out that video if that applies to your situation. Now, the next perk of using your VA home loan benefit is going to be no private mortgage insurance. Private mortgage insurance is an insurance premium that you pay every single month whenever you do an FHA loan or a conventional loan and you put less than 20% down. This does not protect you at all. It only protects the lender in case you foreclose or default or have anything go wrong in regards to paying your mortgage back. Fortunately for you as a veteran, you have the VA backing you, which is why there is no private mortgage insurance on VA loans. The last one that I would say is a major perk is there is no debt to income ratio. Now, if you've ever bought a home before, or you've even had a conversation with someone about buying a home, you probably have heard about this little thing called debt to income ratio. And simply put, it's a percentage based on how much money that you have coming in versus how much money you have coming out. If you make $10,000 a month and you have $5,000 a month going out in all of your bills, including your housing expense, that's roughly a 50% debt to income ratio, just for simple math. Well, VA does not use debt to income ratio to qualify you. If you're working with a lender and they tell you you need to have a specific debt to income ratio to get a VA loan, that is not a VA guideline. That is what's known as a lender overlay. The VA uses a thing called residual income. And the residual income requirement is based on where you are located geographically. This is first the region that you're in, Northeast, Midwest, South, or West. And then it's based on your household size within each of those regions. So as you can see here, you will see there's a different amount roughly depending on what region you're in and the household size. Simply put, the larger your family is, the more the VA expects you to have left over after all your bills are paid. Why? Because there's more mouths to feed. If there's just one veteran or one person in this loan that is buying a property and one person living in that household, that's less mouths to feed and be able to take care of. Hence, why the VA is allowing you to be able to have less money left over. Now, there's one thing that you need to keep in mind here, and this is going to be the only time debt to income ratio does actually play a part on a VA loan. You see, if you notice here where it says 41% is ratio greater than 41% requires a little bit of an increase in how much money you have to have on top of the residual income guideline, and that is 20%. And what this means is if you do have a debt to income ratio of over 41%, the VA wants you to have a little bit more money left over on top of the already existing residual income guideline, just in case, because it's just looking a little bit riskier. Now, the benefit here is regardless of what your residual income amount is, as long as you, or excuse me, is regardless of whatever your debt to income ratio is, as long as you meet VA's residual income requirement and also, the lender that you're working with credit and underwriting requirements, your debt to income ratio does not actually matter. I've seen veterans with the 65 and 70% debt to income ratio be able to achieve homeownership because they met those other requirements. So it's still a very powerful loan. Now, just for the sake of giving you guys an example of what this would look like whenever you have to have that increased 20% left over, let's use a family of 3 in the southern region. The current amount you would have to have is 889 if your debt to income ratio is under 41%. But if your debt to income ratio is over 41%, the VA is going to require that additional 20% left over, which means that you now need to have 1,066 and 80 cents left over after all of your bills are paid in terms of the minimum amount that you're going to be needing here. Now, let's jump into our scenario to go through a few things that are going to be coming along with what we have going on here. Now, I have an example of a Social Security letter that one of my clients had sent over to me. They're actually the beneficiary of it, and they're receiving $1,300 a month, as you can see there. Another example that I have from another veteran that I am working with or have worked with is what their Social Security benefits verification letter looks like. And they are receiving, as it's a little blurry there, but I just wanted to zoom in on that, $2,780.80. Now, for our scenario today, because I'm using 100% VA disability and also using the Social Security, I'm going to be breaking this down and kind of splitting the difference between the two. So the 2,780 I felt like was a little higher because it's not as common that I see. And the 1310 was, I would say, more average to lower amounts. So I split the difference and I just went with 2,045 and 40 cents is what we're going to use as the potential income that this scenario is receiving for Social Security. But we still need to add in our 100% VA disability rating. So when we look at this little chart here, it is showing how much money you would be making from VA disability depending on your household size. So I wanted to use a household size of 3, similar to what we did with our residual income requirement, which would be 1 child and a spouse. And that was $4,098.87, which brings our total amount of monthly income to $6,144.27. So now we need to talk about our monthly debts for this scenario because I want to be as realistic as I possibly can. Monthly debts, when you are applying for a loan, could be for things like credit cards, auto loans, student loans, personal loans, alimony, child support, separate maintenance if you are, and also childcare, because if your kid is in school or a daycare, that also gets factored in as well. But keep in mind, the balances of those things is not what matters. It's what your monthly payments are that matters because it's going to be counting against your monthly income. So if you feel like you have really high balances on things, keep in mind that those balances may not be the things keeping you from qualifying. It's actually going to be based on how much you're paying every single month. That's how it works when you're applying for a mortgage. Now, if you are married and you are living in one of these states, these are known as what's called community property states, which means if you are legally married, you must include your spouse's debt or monthly liabilities. Even if you guys are legally separated or the other person doesn't want to be on the loan, you do have to factor that in those particular states. That is going to be one of the requirements. If you're not in one of those states, you don't have to worry about that. Now, another thing that we need to also factor in is going to be the monthly shelter expense. This is what the VA is going to require as an additional amount that they want you to have left over, similar to the residual income requirement. And this is solely just for things like maintenance, or I would just say for keeping your house in order in case something maybe breaks. That's kind of be what this is for. Now, this is not a bill. This is not an added liability or anything, excuse me, or anything like that. This is just solely what the VA is saying. Hey, we want you to have this amount left over on top of all of those other things. And the way they calculate this amount is as it's shown in the example. It's based on the square footage, and this is the living square footage, not the total square footage. If you're buying a house that's on a 5,000 square foot lot, this is not calculated based on the 5,000 square foot. It could be a 5,000 square foot lot, but the living area of your home that you're actually living in is only 1,500 square feet. The calculation is based off of that. So just keep that in mind. This is not an added expense or an added bill of homeownership. It's just solely how much money the VA is going to be expecting you to have left over. Now, here is what I have broken down for this scenario in terms of how much you can afford when it comes to the easiest way to do this. We have our total monthly income of $6,144.27. And then I wanted to use our monthly liabilities at $1,000 a month, just a round number. So let's say you got an auto loan and a few credit cards, maybe some student loans. All those bills equal out to $1,000 a month. Then you have our monthly residual income requirement at $1,066.80 because I'm assuming that you're going to be over the 41% debt to income ratio example that I showed you guys earlier. And then we're going to be looking for a home that's 2,500 square feet. So that means that you must have a $350 shelter expense there as well. This brings our grand total of our monthly payment, and this is going to be the maximum monthly payment that you can afford at $3,727.47. Now, we need to see what's out there and what homes would actually fit this mold. Let's take a look. All right. So, as you guys probably already know by now, I live in San Antonio, Texas. So, that's where I'm going to be using the home search for today's video. If you guys want to see me do a breakdown for the next video that I'm going to be doing in this series, comment below what city and state that you're in, and maybe I will actually use your actual location for some different home searches that are out there, as long as they do have that 100% disabled veteran exemption when it comes to property taxes, just for the sake of the series as well. But for today, we're going to be using San Antonio, Texas, and we are going to be searching only for single family homes. The next thing that we're going to search for is we're going to also look for homes that have a specific square footage. So if you remember, I had used homes that had a square footage of roughly 2,500. So I'm actually going to do it more of a radius between 2,250 and 2,750 just to give me more homes that are possibly out there. And someone even commented on my last video saying, hey, the only homes that you shown were one-story homes. And I thought that was interesting. So you know what? I'm going to include two-story homes, which I personally would rather have a one-story home myself. But hey, let's look up two-story homes here in San Antonio as well. Now, what we'll also do is let's look for, some things that would go along with this family's needs. If you recall, we're doing a family of 3. So we're going to do, let's do a 3-bedroom or more and at least a 2.5 bathroom. And then I'm also going to set our search parameter. I'm going to do homes that are at a minimum of 300,000, and I'm going to do it at a maximum of, let's do 450. Now, I don't know exactly. Honestly, I have not fully done any research on what I actually know the answer will be for our monthly payment breakdown. This is just roughly where I think it will possibly end up between for this example. And I also want this house to have a 2-car garage as well. I think we got what we're looking for out of this guy here. So let's go ahead and search and see what is out there. And from here, ooh, I kind of like this one, 325. That's a 5-bedroom house, by the way. Let's see what else is out here. We have 329. We have 335. Let's see which one I want to go with. I'm going to go with this guy, 365. We're at 365. What we're going to now do is use this home as our example, and our square footage is slightly bigger. It's not much, but let's just assume so that way we don't have to recalculate how much money we have for our shelter expense like we did at 350, and we're just going to go off of this for now, okay? As the shelter expense. Now, we're going to go all the way down to the details for this property, but now what we need to do is figure out what the monthly payment is going to look like. On our mortgage calculator over here, 365, we're doing 0 down. And now when we get to the interest rate, this is just what was in on the calculator when I opened it up. Whenever I get to this website, it usually has that number there. So I'm going to look at 30-year fixed mortgage rates. This is national average data. This is not exactly what the number is going to be for you or for somebody. This is just kind of giving us an idea or a metric of where the market is right now. It's saying 6.4. I'm going to actually round it up to actually 6.5 for the sake of this example. And then we're going to go down to right here where it says service connected disability 10% or more. We're going to check yes, because you are exempt from the funding fee. Now, when we go down to property taxes, we're going to zero that out. 100% disabled veteran in the state of Texas does not have to worry about property taxes. And then the next thing we need to do is we need to factor in our homeowners insurance. And on this property, it's saying homeowners insurance is $268 per month. And because in the calculator over here, it's basing it off of a yearly amount, I need to add that up. And that makes it $32.16 per year. And this house is also in an HOA. So we're going to add up the HOA amounts right there, which would make the HOA annually at $780. We're going to delete this because that does not apply. And we're going to go ahead and hit calculate to see what our payment is. So for a veteran, 100% disabled veteran, here is what the monthly payment would be, $2307. So we actually have a lot more room to go as far as if someone actually wanted to obviously go much higher in this situation. So let's actually take a look and see what we can find. I'm going to go straight into it. I'm not even going to cut here. I'm going to let it be. This is a very raw video. If you guys want to bounce around, please, by all means do. I'm going to actually increase this to, let's do 420, and I'm going to do 475. Let's see what we can do here. And let's just go high right here. 464, 500. I love when they have these numbers like this. So 464, and it's actually under our square footage of up to 2,500, which is perfect. All right. So 464, 500. We're going to put that in there. So we're actually just going to do 465. We're going to leave our interest rate the same. Let's go down to what the homeowner's insurance was looking like. This one's pretty high, 341. So annually, that's 4,092. We'll put that there. This property is also in an HOA of $79. So we're going to multiply that by 12 as well. That's $948 annually. And we don't have to worry about property taxes once again. So we'll go ahead and hit calculate. $2,900. So we still have more room. This veteran has more room to be able to go up on a monthly basis. But this is a good example here of how powerful it is when you're doing this as a 100% disabled veteran in a state where they don't charge you property taxes. Because as you can see right here, it's saying property taxes would be another $568 a month. So that would put you at $3,500 a month easily right there. $3,500 a month for that same home. So do I think that it makes the home not worth it? No, not necessarily at all. I'm just saying it makes a home like this a lot more affordable for a veteran that maybe would not be able to afford this home if they did have those property taxes. So that's really where I'm going at with these examples for you guys. So I'm going to do one more. I'm going to increase it. I'm not going to go too crazy here, guys. I want to just, for the sake of time, let's do something at 500. And we'll also do something at 550. Let's do that. We'll hit done. And I think it's because our square footage is actually a little too small. Typically, once we hit a certain range, let's do 3,000 square. I think we just need to remove that filter altogether here. Let's do minimum, max. Okay, now we're better here. It's not really giving me, oh, that's why. To do 475. There we go. I want to get something over 500 here for you guys. Let's see, 525. This one's pretty big in terms of square footage at 3,000 square feet. So it's significantly bigger. So we'll still use this just for the sake of this example. And we'll go all the way down to our homeowner's insurance. That one is $385. That's $46.20 annually. This one also has an HOA as well of $45,540. 40, so it's lower than the other one. Don't have to worry about HOAs. That would be a big one there. And hit calculate. 3318. So I'm going to leave it here, guys, just to give you guys an example of really what's possible, especially when someone's making that amount of money with their VA home loan benefit. Now, if you wanted me to do a breakdown for you guys in your city and state in the next video that I'm going to do to this series, go ahead and make sure that you guys comment that below and let me know where you're at. I just need the city and state, man. As long as it is 100% disabled veteran exemption in that state, I will use it, or more than likely use it unless I get a bunch of those comments. I'll have to pick and choose, obviously, and I will do my best to try to include it in our next example.